There's a lot happening in the housing market right now with a lot of people having something different to say. There's this constant fear in the air that we're all feeling of what is going to happen in the future with the real estate market and the overall economy. In the last couple of weeks, I've had some interesting conversations with real estate professionals like myself, with a lot of people that are executives in the tech industry, some of my friends, also with active buyers and active sellers in the markets. In today's video, I'm going to discuss current and hot trends that are happening right now and how they can impact you, the seller, the buyer, or the potential renter. So let's get started. So number one, we've seen this trend happening in the last 3 years almost now, where the rents have risen almost year over year, 50% increase in the last 2 years in rents. And right now, we don't see that trend slowing down, especially when the feds have raised the rates and home affordability has gone out of reach out of low income to medium sized folks throughout the country. So you're going to start to see more people that have to rent, which is going to cause rents to go up even higher. I'm hoping that we can get a little control over this. They did stabilize a little bit, but due to more increased demand, we're gonna see this number rise. And also, we've seen that in general, cost of labor has gone up. So landlord expenses have definitely risen in the last few years due to this supply chain distortion. So we're going to continue to see rents go up, but we're hoping that they'll be stabilized in the near future. Number two, well, we're seeing sellers holding off right now. So a lot of conversations that I've had with sellers have been about them holding off on listing their home, especially sellers that don't have to sell right now, because a lot of sellers have noticed that the home next door sold for $1.5 million last year at the same time, and now the real estate professional is advising them, hey, that we have to list it at 1.3, hoping to maybe sell it at asking or even lower in some cases, right? So this is an emotional thing. So a lot of sellers are saying, well, if I don't have to sell, I'm just not going to sell. So we are seeing less inventory on the market. There's a number put out by National Association of Realtors that statewide here in California, last year we did north of some 430,000 homes, and looks like where we are right now, that number is going to be closer to half of what we did last year. So definitely less inventory in the market because sellers are just holding off on selling. Number three, we have about 3 months of inventory. Now, these two numbers differ a little bit. Over here, I'm saying there's less inventory, and this number is saying that there is more inventory available because now we have less buyer demand as well, which I'm going to get into in a second. But there is more inventory available, almost 3 months of inventory available. Compared to last year, there was about 1.9 to 1.8 months of inventory available in the market. And this is a statewide number, but these numbers are very relative to other areas of the U.S. Housing market. And for it to be a buyer's market, this inventory number needs to be around 6 months. And most experts get that figure from the last '08 crash that we happened, where homes were sitting on the market for a very long time and we had 6 months of supply on the market. And that would sort of shift it to a buyer's market, a fully buyer's market. We're not quite there yet. I wouldn't call this a buyer's market. We're somewhere in the middle of a seller's and a buyer's market right now, where you are starting to see price negotiations and in some areas price reductions from asking price. So we're somewhere in the middle right now. Number four, homes are still turning depending on where you are in the country. But here, let's just talk about the local market here in the Bay Area. I'm in the East Bay Area, and real estate's a very boots on ground local market. So let's talk about local markets here. In the city of Hayward, average days on market same time last year was 10 to 12 days. And that number has gone from 10 to 12 days to 30 days. Now, it just means it's taken a longer time to sell a property, but homes are still turning. And properties are still seeing year over year appreciation. So when I say year over year, obviously we're talking comparing where property values were last year and where they are this year. Now, it's going to be very interesting to see where they are next year because, like I mentioned many times in a lot of my videos, that your real estate is a lagging indicator. So what is happening now with all these things happening, with the layoffs and all the stuff that's happening in the market right now, with prices adjusting, the rates going up, we're not really going to see tangible numbers until the next 4 to 5 to 6 months. So right now, if you look at the numbers, yes, there was still year-over-year appreciation in home prices because here in the Bay Area, we didn't really see significant price reductions. We saw, in some cases, we saw that around the areas, but in the Bay Area, prices still stand strong for homes. Number 5, tech layoffs. This has become a topic of discussion as all of us are watching the news and seeing all the stuff that the media is putting out, with a lot of these big tech companies laying off employees. And we've seen in the last few months, Hewlett-Packard lay off 5,000 employees, Cisco with 4,000 employees, Amazon just did a layoff. Just did their layoffs with 10,000 employees. Meta, Facebook, 11,000 employees. Salesforce, a couple thousand. Twitter at around 3,700 employees. Zillow and Opendoor and Microsoft with a couple hundred employees, totaling to something of about 40,000 plus employees being laid off. So 40,000 employees sounds like a lot. But if you compare that to the overall tech industry, it's a small number. But it's very scary because a lot of people are thinking, well, what does this mean? And we haven't really seen reports yet because this happened so recently. Well, layoffs have been happening starting the beginning of the year, but we haven't seen the layoffs in the thousands yet. So now that some of the companies are laying off people in the thousands, it's a scary thing because we haven't really seen layoffs for many years now. So when we hear that, it scares us. What's really going to be interesting is to find out what kind of jobs are the ones that are being laid off. Like, for example, when Amazon laid people off, we don't really have details on, were they line workers, warehouse workers, were they top executive, middle executives, lower end executives, what kind of engineering or tech jobs they were they IT related, hardware related. So we don't exactly know what type of jobs they were. And also we don't know yet that the people that were laid off, are they still laid off? Are they able to find jobs rapidly? And it's really hard to have that data yet because we're at the end of November and we just started to hear these layoffs at the beginning of November. So it's gonna be very important, more important than ever, to watch market and look at month-to-month data to see what is happening as we move forward in the next few months. Because layoffs right now and the job market is a huge X factor in this whole housing market situation, because a lot of these folks that bought these homes in areas like the Seattle area, New York, these metropolitan areas of the Bay Area, LA, parts of Chicago, Austin, all these areas that are heavily impacted by the tech industry, these are the folks that bought homes. So it's going to be really interesting to find out what happens and how the market moves when it comes to layoffs and how these people are able to find replacement jobs in the next few months. I just wanted to take a minute to say thank you for having confidence in my content. And like always, I love you all. Please, if you're getting value out of this video, hit that subscribe button, hit that like button, and leave me a comment because I love to hear from you. We did see a lot of unnatural growth in the real estate industry, in the stock industry, and a lot of other markets saw similar growth. And I believe it's natural for the market to do what it's doing right now because inflation is getting out of control, and hope we're getting a grasp on it. So this had to happen for our market to start going into more of an equilibrium and more of a normal and healthier market. So I'm hoping that this is good news for us. It's good news for the Feds to hopefully start to slow down their aggressive approach to increasing the rates and slowing down the market, because it's causing this ripple effect. And I'm hoping that we're all hoping that we can have more of a smooth landing, because we're all in this together, and for us to be healthier overall as a healthier economy, these things do need to happen. But like always, I would suggest you find out what your local rents are where you're staying, and if you are in a month-to-month lease, find out what's going to happen if your landlord puts that rent increase in your mailbox, what that's going to look like, how you can negotiate. If you want to continue to rent, if you worked your numbers out already and you know that rent's the way you want to go, and buying a home right now is not going to work out for you because you're not able to afford it, or it's just beyond your budget and your comfortability, then you definitely want to see where your rents are and run those numbers right now, because it's very, very important, and continue to watch the month-to-month data. Thank you for watching. Until next time, this is Karan Singh.